Hey everybody, Jeff Garber, mortgage expert, and today I want to talk to you a little bit about the truth about credit pulls and credit scores. Get a lot of questions saying, "Yeah, Jeff, I'd love to get pre-approved, but are you going to pull my credit? And is that going to be a hard pull?" And I feel a lot of people might be hesitant or even resistant to getting pre-approval because they're kind of scared that the credit pull is going to affect their credit. So let's go through that. So first of all, there's really two types of credit pulls now available that weren't always available to consumers. All right? One is called a soft pull and the other is called a hard pull. Now, a soft pull is where we can actually go in and take a look at your credit without that counting as an inquiry or a hard pull. So it won't count as an inquiry and you will not lose any points for that pull. And then the second type of pull is the hard pull, which does count as an inquiry and you probably will lose some points because of that credit pull. Now, let's talk about the two briefly so that we can figure out which one is best for you. So when we're talking to people and they tell us, hey, we have credit issues, we're not really sure, we know there's things going on, we call them challenges, and we want to see what's going on, but we don't want to make it any worse. We could do a soft credit pull with all three bureaus and see the full report with scores. And then if the credit is not where we want it to be, well, now we could put you on a plan to get it where we need it to be. And all the while, it did not affect your scores at all. It was not a hard pull. Now, let's say on the other hand, you've been working on your credit, but you're not quite sure where it's at. And we still decide we want to do a soft pull to see where things are. And let's say we do the soft pull and credit's right where we need it to be. Well, then we could just turn around and do the hard pull right there, knowing we're going to get the same scores. Okay? Now, a soft pull, all we can do is see the scores and see the report. We cannot use that for a live loan. We can only use that for pre-approval. So if we were to go by your soft pull until you found a house, and then you said, okay, Jeff, now I'm comfortable with the hard pull, well, we could get ourselves in trouble because different things report different days of the month. And when we go to pull the hard pull, our scores might be different. So the way credit works is your credit score is not something that's frozen, so to speak, for a certain period of time. For example, let's say you pull on the first of the month and you have a 700 credit score. Okay. It doesn't stay a 700 until the next month and then you re-pull and it changes. Your credit could change every day depending on how much credit you have and when these companies report to the bureaus. I might pull a credit report on a Monday. All right, let's say we pull a soft pull on a Monday. Okay, and I'm just gonna make this example up just to make it make sense. So we pull Monday on a soft pull and you have a 740 credit, which is phenomenal, okay? But little did we know that you were 30 days late on a payment, maybe inadvertently, got lost in the mail or whatnot. And the next day on Tuesday, that reports to the credit bureaus. Okay, and then let's say Wednesday, in my hypothetical agreement, you get under an agreement and I have to re-pull your credit on the hard pull now. But that late payment was reported on Tuesday. That 740 could now be a 700 or even lower. All right, so we have to have a strategy when it comes to credit. Now, let me summarize real quickly because there's a couple more points I want to make. So far, we talked about the two types of credit pulls. There's a soft pull where I can see the scores and see everything on your report, and I can use that for pre-approval. And then there's a hard pull, which actually dings your credit. You lose some points for that, but we have to use the hard pull if we're going to go to application on a loan. Whether you're under agreement or we decide to move forward on a refinance, we need to submit that loan with the hard credit pull. Okay, now, knowing that, there will be reasons why we would want to do soft pulls versus hard pulls. If you come to me and say, hey Jeff, I know I have great credit, all right, I'm looking to buy a house and settle in the next 120 days, all right, and we do the hard pull and your credit's great, all right, you might lose some points after I make that pull, but it's not designed to sink your credit. It's not designed for you to go from a 780 to a 740 or a 700 because you had a hard inquiry. All right. Typically, if you have really good credit, you might lose a few points and then you'll get it back in a month or two. More than likely, it won't even have any effect on you. Now, let's say that you're at one of the thresholds in the mortgage industry. So on a conventional loan, when you have a 740 or higher, you're in a bucket that's going to be eligible for the best rate available. 720 to 739 is the next bucket. 700 to 719 is the next bucket. So let's say I pull your credit today and you have a 741 score. All right, well, that's good. If we're going to get a mortgage in the next 4 months and close on it, your 741 middle score is going to get you the best rate in terms available at that point in time. Now remember, daily, other accounts are reporting to the credit. So let's say you have a credit card and you put a little bit more on it this month and it hits in 3 days, and you go to another lender and you get a credit pull in 3 days. Well, you might now have a 739 or 738 with that lender. All right. Okay. Now, a couple things here. Number one, many people say, oh, the reason my scores went down is because I had another person pull it. So here's the deal when it comes to mortgages. And this is really important advice that many people don't want to take, because people don't like being told what to do. But it's really important when it comes to credit. And it's really important when you are looking for a lender or shopping for a lender. All right, it's best to get all your credit pulls as quickly as possible. I always say within 2 weeks. I'm not 100% sure on what that number is, but let's pretend it's 14 days. All right, you should pick the lender you want to work with before you get under agreement. All right, and get your credit pulls. If they're all hard credit pulls, if you get them all within let's say a 14-day period, and it might be 21, but I'm not 100% sure because these things change, and depending on which credit expert you talk to, you hear something different. But what I do know is typically within a 14-day period, all right, all of the mortgage scores that you get run on a hard credit inquiry are all going to count as one pull. So if you got me pulled today, somebody else tomorrow, a couple the next day, all right, none of the people that pull are going to see the points that you got dinged for, because after 14 days, that's when you may lose all of those points. Could be 5 points, 6, and it's so you can get as many pulls you want within, let's say, 14 days, and it's all counted as one pull, because they don't want to punish you for shopping around and finding the right lender. All right, but where this could backfire on you is, let's say you talk to me today and you get a credit pull, 740, perfect score. All right, 3 days later, you talk to another lender and you get a pull, and now you're a 735. All right, that wasn't because of my credit pull. All right, something else hit the bureau in between my pull and the next pull, and that you can't control unless you know when all of your liabilities or debt on your credit report are reporting. So I might have a credit report. I might have a credit card that reports on the 5th every month, and my car loan might report on the 8th, and my mortgage might report on the 16th, and so on. So every time something reports to the credit bureaus, your score theoretically could change for the better or for the worse. All right. So when it comes to getting a mortgage, all right, and you're worried about losing points for the pull, at least get your pulls within the first week or two, because then at least you're not losing points because of the credit pull. Okay. Now, I hope this helps clarify a little bit. Knowing that you have a soft pull option is good. Now you could say, if you came to me and said, Jeff, I want to get pre-approved, but I don't want the hard pull right now, fine, we'll do a soft pull. But if we like what we see, I may want to turn around and make that official and pull the hard pull. And now I know we have that credit report for 120 days. So typically a credit report lasts for 120 days, which means we want to have you closed before this report expires. Now, again, if you have great credit, and this happens a lot, this is a normal phenomenon. In this market, people don't always find and settle on a home in 4 months, 120 days. So we have to pull a second credit report, which is another hard hit. Well, most of the time, it doesn't really affect us. Unless something bad happens, or you ring up a credit card, or you do go 30 days late. If you have typically good credit and you listen to what we tell you to do from this point forward, typically when we have to rerun credit, we're typically okay. Sometimes you do fall from a 743 to a 738. All right, not the end of the world. That is not going to make your rate go. Let's pretend our rate is 5% today, at 740 credit score and you go to a 735, right? You're not going to be at 6% or 7%, right? Okay. All right. You might even still be able to get 5%. Who knows? Or maybe you're 5.125 at worst. Or maybe you have to pay a little bit of money, a few $100 maybe, to get that score, or 1,000, whatever the points add up to. Okay. What I'm saying is the ultimate reason for this video is for you to understand that there are two types of credit pulls, a soft pull and a hard pull. We can do soft pull and pre-approval. If we like what we see, we may flip it right to a hard pull. All right, and if we do a hard pull, it lasts for 120 days. All right, you might lose some points for that pull. All right, but typically if you have good credit, you'll get them back. Now, if your credit is already challenged, right, and you know it's shot, let's say, and you know it's in the 500s, right, then it doesn't matter. If you want to apply, get pre-approved for a mortgage, all right, and you already know your credit's there, then we might as well pull it and see it. All right, even if let's say we do a soft pull, we can do the soft pull and we can help you build your credit. All right, even if I do a hard pull and you were to lose a few more points, all right, we have the starting point, which is my entire point here, is we need to see what's going on your credit report so that we can figure out how to get you on a plan to fix the credit. Okay, so we need a starting point. All right, so in summary, in conclusion, again, two types of credit pulls that you could get. A soft pull, no effect on your score. We could see it. We could see your scores and we could see what's on your credit. If we know the credit's good, we could turn it right into a hard pull. And now we lock in those scores for 4 months. If our credit's not where we need it to be with the soft pull, then we can put you on a plan to help get your scores where we need it to be. And then we can pull another soft pull later to see if they're there. And then boom, pull a hard pull if we get what we want, and boom, lock those scores in for 120 days. All right. Very important that when I say shop for a lender, it's not always about mortgage rate. And I know Jeff, you're just saying that because you're a mortgage guy. No, I'm not saying that because I'm in the business and I originate loans. There is more to working with a lender than the bottom line, having the best interest rate and the lowest cost. All right, you need to be working with a lender that knows how to get you from start to finish, is going to give you good advice, is going to have amazing service, is going to be honest with you. Okay, these are all attributes. So you want to find this person before you get under agreement. Okay, so shop your lender before you get under agreement, not after you get under agreement. Okay. If you do it before and you already know who the lender is going to be, then you don't have to worry from that standpoint. And then you get under agreement and that lender is going to take good care of you. And if you've done your due diligence, you should be fine. The worst thing you can do is talk to a lot of lenders up front, let's say, not pick any of them, go get under agreement. And now you're under agreement and now you're going to shop that loan, just based on the lowest rate. All right. And that person, that lender, who knows? Are they even going to be able to get you to settlement? We hear horror stories about people that go for the lowest rate only. All right. I'm not saying take the highest rate because Jeff's a nice guy, and I'm not saying I'd be the highest rate. My point is you want to find somebody who has a great balance, somebody who's competitive in rate and fee, somebody who's got great service, is going to walk you through the process, break it down for you, and help you get your offer won and give you good financial advice. And they're not just taking an order like you're going to a restaurant for a breakfast sandwich. Hey, I'll take a ham, egg, and cheese. Thanks. No, it's, hey, we need somebody that's going to break this process down for us, give us good advice, explain to us a few different options and why this may or may not be better. All right, explain to you how to get your credit where it needs to be. Have amazing follow-up, amazing communication. They need to be able to close on time and they need to be honest. All right, so at the end of the day, do not worry about the credit pull. Okay, it's not the end of the world. The worst thing you do is get a credit pull from, let's say, me today, then wait a month and get another credit pull from another lender, and then maybe wait 3 weeks and get another credit pull. Then you could start to lose points. Oh, and one more thing, other things that you apply for in between could affect your score. So if you're doing a mortgage pull, let's say you have 10 mortgage pulls in a week, that's going to count as one hit to your credit. But if you apply for a car loan, that's another hit. A credit card, that's another hit. An installment loan, that's another hit. A student loan, that's another hit. You get the point. So if you are in the market for a home, Do not apply for any credit at all until after you talk to the loan officer. So if you're talking to me, I'm going to tell you exactly what to do from the moment we meet, and if you decide to work with me, until you get under agreement. Because we want to make sure we keep your score at the best we could keep it to get you the best rate and terms possible. So I hope this helps. If you have any questions, visit my YouTube page at www.mortgageinstructionmanual.com. You can comment below. You can reach out to me. I'll be happy to answer any questions anytime. Have a great day.